Hey everybody, I'm sorry I couldn't be with you. Something came up. I'll be back though. And today we're going to talk about something new. We're going to be looking at this thing that we have in our country called the Federal Reserve. Now, if you're following directions, you hopefully already watched the little video on YouTube that I wanted you to see. And I know that that gives a lot of good information, but there's also parts of it that are a little bit confusing. So that's why I'm here. I want to kind of run through some of the details about the Fed and really make sure you understand. So by the end of this, you will hopefully know three things. Number one, what exactly is the Fed? And that's the Federal Reserve, by the way. So that word, the Fed, it's just the Federal Reserve. So what is it? That's the first thing. Second thing is, what does it do? And then the third and final thing is, how does it do one particular thing called monetary policy? So let's try to make this get going. I don't want to take up too much of your time. Let's talk about what the Fed is. The video mentions some of these things, but just to recap, it's the central bank of the United States. You don't really need to know this. We've had a lot of different attempts at central banks. Don't worry about that information. But basically what it is it's an institution that uses monetary policy to control and, well, influence maybe is a better word, banks and our economy. They're not part of our government, but they work very closely with our government, and that's the central bank. It's the U.S. Federal Reserve. Now that's a little bit wordy, so let me simplify it even more. You might think of the Fed as like a bank's bank with some fancy jobs to do, and that's a good way to think of it. So just like you put money in your bank puts money in the Fed. And also, it works very closely with the government to try to keep the economy stable and healthy, just like your bank tries to keep our communities stable and healthy by giving loans and keeping people's stuff safe. Now, the next question could be, well, who's in charge of the Fed? And the answer is a lot of people. It's run by a group of men and women called the Board of Governors. The Board of Governors are 7 people. They serve for 14 years at a time in the job that they have. The U.S. president gets to pick who has those jobs. And for 4 years at a time, there's a single chairman. One interesting little thing is that the current chairman is actually not a man at all. It's a chairwoman, and it's this lady, Janet Yellen. And she's got some nice frosty white hair. This guy is very famous. He is the former chairman. His name is Ben Bernanke. He has a nice frosty white beard. He's the guy who was in charge of the Fed during the 2008 financial meltdown. So he's still somebody that a lot of economists listen to because he has been through a lot. So that's the Board of Governors. Now the next question is, where is the Fed? Well, it's more than one place. It's actually spread out all across the country. There are 12 different districts, a little bit like the Hunger Games, and there's a headquarters in each district. So here we are in the United States. In Washington, D.C., we have the headquarters of the Federal Reserve, and this is where Janet Yellen and the other Board of Governors get to hang out. You'll notice that we have a branch in Zone 7 in Chicago, right here. This is it. If you've ever been downtown Chicago, it's on the corner of Jackson and I think LaSalle or somewhere down there, and that's the Federal Reserve branch of Chicago. I have been there. I had my picture taken. I'm not going to show you the pictures because it's awkward. Okay. Awkward pictures. I've been there before. So that's what the Fed is. It's like a bank's bank with some other fancy jobs to do. So let's talk about those other fancy jobs for a minute, shall we? There are 4 specific things that the Fed is asked to do. The first one is called monetary policy. And monetary policy is simply anything the Federal Reserve does to try to help us have a good economy. We know that a good economy is one where people are buying products, businesses are hiring workers, and people are earning money so they can continue to buy products and help businesses. It's this positive cycle. So there are things the Federal Reserve can do to try to help that happen. But we'll talk more about that later. The next thing they do is they supervise and regulate banks in our economy, in the United States. So they're there to make sure that banks aren't making unwise loans, they're not breaking rules. Number 3, they're there to provide special financial services to us, like when you write a check, the Federal Reserve is behind the scenes working to move money from one person's checking account to yours. They're also there to make sure that there's enough money in our circulation, in our economy. So the U.S. government prints currency, and then the Fed is in charge of dispersing that out to banks and out to businesses. And then number 4, they're there in case of emergency situations in our economy. So we sometimes say that the Fed is the lender of last resort. They're there to help make sure banks have enough cash on hand so that way people like you and me have access to our money if we ever need it. So that's what the Fed does. I went through that super duper fast, but there's one function you really need to know, and that's number 1. It's monetary policy. So let's dig into that a little bit more. The question is, what is monetary policy and how does it do it? Well, monetary policy is anything the Federal Reserve does to try to encourage a healthy economy. Remember, that means that people have jobs, inflation is under control, GDP is on the rise. That's a healthy economy. And the way that they do it is they make it either easier or harder for banks, businesses, and us, people, to get money. So let's look at this. There are 3 ways they make it easier or harder for us to get money. Thankfully, we only care about one of those ways. There are 3, but they're very complicated, and there's just one that I want us to look at. And that one tool is called changing the discount rate. The discount rate is an interest rate, and it's an interest rate that the Federal Reserve charges to banks if a bank wants to borrow money from the Fed. So banks borrow money all the time, just like we borrow money all the time. And when you borrow money from your bank, where do you think your bank gets some of that cash? Well, they get a lot of it from the Fed. And so if the Fed wants to, they can force banks to pay less or more money for the money that they want to borrow, which will then have an impact on how much money you can get from your bank. So for instance, if the discount rate is lower, your bank will borrow more, and then they will give that to you or, to other people in our community. And so then there's more money in the economy, people will buy more things, and the economy will grow a little bit. GDP will rise, unemployment will drop. It's good. But maybe the Fed wants to just tap the brakes on the economy. They don't want to bring it to a halt, but they want to just sort of bring it under control if it's going a little too fast. Maybe inflation is too high. They can slow things down by raising that discount rate. So that way it'll make sure that banks don't borrow as much, you and the other people in your community won't borrow as much, and the economy will start to slow down just a little bit. Hopefully not too much, but just enough maybe to bring inflation under control so that way the economy stays healthy. So that's kind of it, to be honest. In about 7.5 minutes, we've covered the Federal Reserve, which is pretty darn good if you ask me. Now, this is a difficult job, and obviously there's other tools that they use to try to keep the economy healthy. But if everything works perfectly, the economy will have high employment, low inflation, strong banks and businesses that produce things well. So there she is, Janet Yellen. Woo. All right, everybody, thanks for paying attention. What we're going to do next is go back to Canvas and do whatever it says, and I will see you later.